looking for bullish and bearish candlestick formations, and then show you firsthand how they're traded, to include an entry, protective stop loss order, and a limit for profit. All right, what you're looking at is the British pound traded against the New Zealand dollar, and we're looking at a 1 hour chart, which means every single one of these candlesticks represent 1 hour of time. We've gone over all the different candlestick formations. As you look at this, you can kind of see many of the different candlestick formations, but what we've really seen is that this market is literally U-turning. See, one of the most important things that a trader can do is literally find trend direction. You have to find trend direction, because if you don't find trend direction, you literally don't know whether you should be trading a bullish candlestick formation or a bearish candlestick formation. There's a saying that goes like this: the trend is your friend until it bends. And so what was happening here is the market was literally in a downtrend, waving down. And as long as the market is below a trend line, it is literally 80% bearish. But once it moves and breaks the trend line, then it is 80% bullish. Now here we're north of this trend line, and the market appears to start to be making higher highs and some higher lows. And therefore, with knowing that the market is starting to rally, we need to be looking for one of the 5 bullish candlestick formations. And one of those 5 bullish candlestick formations are bullish shooting stars, morning stars, a bullish piercing line, a bullish engulfing candle, or a tweezer bottom. And so if you were sitting in front of your charts and you saw that the trend line has been broken, you literally would be looking for one of those bullish candlestick formations to enter the market. Here we can see the market's starting to retrace, and so we'd be looking for some sort of bullish engulfing candle that would tell us that this market is getting ready to rally. Now, here we have a bullish engulfing candle. Now, the example that I showed you, which was an ideal example, was that the bullish engulfing candle engulfed 3 bearish candles. In this one, it's only engulfing like 1 1/4 of the previous candles, which is still an engulfing bullish candle. Now, I want you to look over here, because trading is all about risk versus reward. And whether we are buying or selling, we've got to make sure that if we were going to risk $1, we'd want to try to capture at least $3. And so here, if this was our risk, this would be $1 in profit. This would be $2 in profit, and of course that would be $3 in profit. That's literally a little more than 3 to 1. That's about 3 to 1. And so what we would do here is, now that we see this engulfing bullish candle, we're going to come in here and we are going to wait till the candlestick closes. In this case, the candle is closed. We are going to buy the market right here, right there. We're going to buy the market. You're going to place an order to enter the market. You're going to place your protective stop loss order a little below the low. This is your risk. If this market turns around and comes back out, you will take a small loss. And then we're going to take a 3 to 1 risk reward ratio, and this is going to be our profit, and we're going to get out right there. Now, the neat part about a trade like this is, here's your risk, here's your reward, 3 to 1. Great part about a 3 to 1 risk reward ratio is that you can be wrong 70% of the time on a 3 to 1 risk reward ratio. As long as you stay true to your 3 to 1 risk reward ratio and only look for trades that are 3 to 1 risk reward ratio trades, you can be wrong 7 times out of 10 and still deposit money in the bank. Now, in this case, here's a bullish engulfing candle. I want you to know that most bullish candlestick formations start to offer that 3 to 1 risk reward ratio. But even if you started to do 1 for 1, you need to understand that 70 to 80% of the time, candlestick formations that are traded in the direction of a trend will pay off 70 to 80% of the time. So even if you go 1 for 1, you still will be able to deposit money in the bank. In an uptrend, you'd be looking to buy the 5 bullish candlestick formations. In a downtrend, you'd be looking to sell the 5 bearish candlestick formations. But now we found a trade. We put our buy here, our stop loss here, and our profit there. There is absolutely no need at this point to sit in front of this computer and watch this play out. This market is going to move on its time frame, not your time frame. If you only have 4 hours to trade, what's going to happen is you're going to start to sit there in the hopes that this market is going to pay you in 4 hours. It may pay you in 4 hours. It may not pay you in 4 hours. But the fact that you're able to set it and forget it is huge, because now that you found this trade, you literally can walk away, come back 8 hours later, come back 12 hours later, come back the next day to see how your trade's doing. Because literally, when you come back, one of 3 things will take place. The market fell, stopped you out for a small loss. The market started to rally and is still in the profit zone and hasn't hit your profit limit yet. Or it's rallied to the point to where it limited you out. So let's watch what takes place here. Here we found the engulfing bullish candle, and then the market starts to move. Like I said, no need for you to sit here. It's going to move on its time frame. And so here the market starts to go sideways, and then boom, it takes off in the direction of the actual engulfing bullish candle. There's one really neat thing about candlestick formations is when a bearish candlestick formation appears, just like you see here, we have an evening star right over here. For some reason, there seems to be a push in that direction, almost the same distance as the actual candlestick formation. Here's a morning star right here. You see, if we bought this, if you take the distance between this low and the close of that candle, you can see it pushed in that direction. Because what's taking place is when the bulls create a bullish candlestick formation, they're literally saying to the bears, in your face, we're taking control of this market. And that's the neat part about candlestick formations. Now, this is what took place in a bullish candlestick formation that appeared. Now, as the saying goes, what goes up must come down. And so what we're going to do is we're going to go through this, and we're going to go and find us a bearish candlestick formation that you can see to take advantage of this market. Let me find my little cell here and come over here. And then all of a sudden we see right here, and I want to move this to the side, this market has been making higher highs and higher lows. This is where we bought. It's been making higher highs and higher lows. And then all of a sudden, you know, once again, our responsibility is find trend direction. The trend is your friend until it bends. And you can see here, the market has bent. The market has penetrated the uptrend line. It is no longer making higher highs and higher lows. It's starting to make lower lows and lower highs. And so what we're doing is we're waiting, in this case, for a bearish candlestick formation to appear. So here we're sitting. Now that the market is going bearish, we're waiting for one of the 5 bearish candlestick formations to appear. What are they? They're a bearish shooting star. They're an evening star. They're a dark cloud cover. They're an engulfing bearish candle, or even a tweezer top. Those are the 5. And so here we are sitting, waiting for a bearish engulfing candle to appear, and then all of a sudden, boom, here you have a bearish engulfing candle to appear. Now, you don't know whether it's going to be an engulfing bearish. I just know that the engulfing bullish and engulfing bearish appear more than any other candlestick formation. But here we have a bearish candlestick formation. And so we go ahead and we literally short the market right here. This is the candlestick formation. We put our stop a little above the high. There's the actual formation. You can see it. And then we want to come in with reward, about a 3-to-1 risk-reward ratio. Here we sit with a 3-to-1 roughly risk-reward ratio. And we'll go, here's 1, here's 2, and here's 3. We just got to make this a little bit larger here, just right here. And so this becomes our sell now. Now the neat part about this is we enter the market selling, okay? We quantify our risk and put our stop loss order above the high, and then we put our limit order for profit right here at the bottom. Once again, you can set it and forget it. There's no need for you to be sitting in front of this computer. The engulfing bearish candle has appeared, and so you just can walk away because the market's going to start to wave. And as it starts to wave and come down, this market is moving in our direction. And so here we are with this market moving in our direction. Now let's go look for a bearish candlestick formation and how you would actually trade a bearish candlestick formation. Once again, the number one responsibility of a trader is to find trend direction. You find that by drawing your trend line. See, the trend is your friend until it bends. In this case, the market was making higher highs and higher lows until it literally broke the trend line. And now we are looking for bearish candlestick formations. So the market, you can see, is starting to retrace. Now, once again, we're looking for risk-reward opportunities of a 3-to-1 risk-reward ratio. There are several candlestick formation strategies that you'll be learning. But in this case, let's stay focused on our 3-to-1 risk-reward ratio. Because the market's moving down, we're looking to short the market and trying to find one of the bearish candlestick formations. And all of a sudden, an evening star appears. See, we have a bullish candle followed by that spinning top indecision or dragonfly doji. I'll bring it up so you can really see this, followed by a decision bearish candle. Now, trading once again is all about risk reward. We bought the other one with a stop loss order below our entry, and a limit for profit above our entry. In this case, we are going to now be selling the market right here. We're going to be selling the market right there. We are going to now place our stop literally above the market. There's our stop. There's our sell entry. There's the evening star. And then we're going to go with a 3-to-1 risk-reward ratio. 3-to-1. This is 1. This is 2. So we literally need to come up with 3. That would be 3 times risk-reward ratio. And so we'll bring this down to about right there. There's your 3-to-1 risk-reward ratio. There's our entry right at the close of that candle. There's our risk. We now can set it and forget it because we have our sell right here. And there's our stop loss order above the high with our limit for profit right there. 3-to-1 risk-reward ratio. And so no need for you to be sitting in front of this computer. And here we are, because the market is making lower lows and lower highs, we're looking for one of the 5 bearish candlestick formations. A nice evening star appeared. And so there we set it and we forget it. We can come back perhaps 8 hours later. We can come back, 24 hours later. As I said, one of 3 things will take place when we come back. We will either A, be stopped out because the market rallied, B, still be in the market, or C, the market has now fallen to the point to where it took us out, limited us for a profit. And this is what literally successful trading is all about, and using one of the really important technicals, which is recognizing your bullish and bearish candlestick formations and then trading those candlestick formations in the direction of the trend. Learning all about Japanese candlesticks as a trader literally changed my life. I can't tell you how excited I was to learn about what Japanese candlesticks communicate to the trader, because a Japanese candlestick is communicating to the trader what it's about to do or may potentially do, or what it may continue to currently do. And as we showed you, as candlestick formations form, they create indecision formations, which means the market may continue to consolidate, or they create a signal, which means it may break out in a direction which could create huge profits for the trader. You see, candlestick formations literally are telling the trader where the market is about to U-turn and take off in a direction. That's the value to the trader about these Japanese candlesticks. And see, the reason we taught you these Japanese candlestick formations is so that you could take these formations and create a trading strategy from those formations in order to make the consistent, profitable trades that you always wanted to make as a trader, and so that you could participate in learning along the way how to become that master trader instead of that disaster trader, and help you achieve your dream of becoming that trader that you started off to be.